Now, this session will explore emerging technologies and how they are revolutionizing funding models, focusing on innovations like tokenization and digital financial ecosystems. So let's get straight down to business. Andrew, welcome. If I could first ask you, how are digital financial ecosystems such as mobile payment platforms reshaping access to funding in emerging and developing markets?
Yeah, thank you. It's great to be here. I'm going to certainly let Sitoyo tag on to this since he knows a lot about this as well, but I can set a little bit of context around this. So the answer is there's been a massive wave of digitization even over the last 5 years. If we just look at our cards across this region and you look at the amount of ATM transactions versus point of sale or actual payment transactions, it's been a massive migration. So in 2019, 2/3 of all transactions on Visa cards in this region were cash, ATM. It's now inverted, 57% are actual payments. So that really is apropos of a significant amount of digitization that has happened in the economy more broadly. So you've got the mobile money players that are out there, you've got the fintechs that are out there, you've got wallets that are out there, and they're all harnessing a consumer base and a seller base that really were not approached and brought into the kind of formal financial ecosystem. They've used new technologies, governments supporting eKYC and other things to make it super easy for them to onboard. So when you've started to see those digital payments, and I'll get to the part of your question that's really, really important is these fintechs, mobile money players and others have started to unpack and offer different financial services. One of them is then funding and providing investments to them. And you need to be able to get more data, digitize payments to be able to see that. And that's been extraordinary now, having that payments data plus some behavioral data to make really smart lending decisions, both to consumers and to sellers at the right time. So whether it's embedded finance and helping a small micro nano merchant be able to give a loan at the right period of time. So we see this continuing. We see payments becoming more consumer-oriented, more flexible, more personalized with both AI and security. So exciting times.
Exciting indeed. As Andrew mentioned there, Sitoyo, you're coming at it from another region. Can you elaborate a bit more what you're seeing in terms of that?
First, just speaking on what Andrew mentioned. So we're a digital payments ecosystem in the continent. We operate in 7 countries. We have over 90 million customers who use our products and services on a monthly basis, and over 5 million businesses that run on M-PESA. I think this two-sided ecosystem provides vital service and opportunity for different funding models. Today we move over 180 million transactions per day with a value of about $1.2 billion on a daily basis. Given the amount of information and data, as Andrew's mentioned about, that is running on the platform, then it provides the opportunity for us and for third parties to create different models. And in 2012, we started leveraging on our data, first to be able to open bank accounts. And today over 50 million bank accounts have been opened digitally through our ecosystem. But also what we also started is the ability to drive savings-led credit propositions. And today we issue about $50 million a day in lending with NPLs below 2 to 3%. And then we've opened up our ecosystem to enable third parties, banks, fintechs, to provide funding to this two-sided ecosystem. So we are seeing funding for large corporates, SMEs, micro SMEs, as well as different models for consumers. And this is not just players in the continent, but players from Silicon Valley, from Europe, or from South America. They can actually come and create new funding models for our ecosystem.
Thank you. Adalberto, what challenges and opportunities, I guess, would you say arise when we see integration of digital bartering systems into global financial frameworks?
Well, it's digital bartering is something that we've seen. It's relatively new. We haven't seen that as much in Mexico, but it actually makes sense if you see it from one perspective. And we were just talking about this a couple of minutes ago, that when you think about digital bartering, it's a model that makes sense, but perhaps a basket of goods in one part of the world can be totally, can have a very different price from a basket of goods in other parts of the world, with much different prices. And how do you think about pricing, and how do you think about valuation? Because it's the same type of goods, but because it has a different type of pricing. Maybe the house, if you want to, for example, you want to do digital bartering with a house, and you want to travel to one part of the world, and your house can be totally different from another house, and there has different valuations. So I think these are kind of like new models that it's exciting to see how these models are evolving, but there's making sure that there's an equivalent, even if it's the same type of product, and there's some sort of like equivalency. It's something that you need to consider as part of the system. And then you have the distribution aspect, right, in which you need to connect people from other parts of the world that want to do this type of bartering. But I'm curious to see what other people here think about this as well.
But Sitoyo, I mean, you sort of touched on this a little bit, and moving on from Adalberto there, how can we enable a more seamless cross-border value exchange when we're moving forwards? I'm sure this is something, Andrew, you'll have an input into as well.
It's interesting because we've been leveraging on partners such as Visa, and Andrew's team has been critical in enabling us look at how cross-border and global payments happen. Over the last probably 10, 15 years, we've seen the cost of remittance, the cost of global payments go down to roughly about 6 to 8%. We are down to about 3%, but with tokenization and blockchain, we can see that can definitely go below 1% in terms of that, and that's why partnerships such as what we have with Visa are enabling us participate from that perspective. I think the other perspective with tokenization of assets, I think just talking on bartering, then today you can have fractional ownership of gold. That means I could be able to pay the taxi person with that. It could be fractional ownership of a painting. It could be fractional ownership of shares of Visa. So now, as tokenization accelerates, then digital bartering will then definitely be something that will continue accelerating. And for us is to provide our customers and businesses the opportunity to trade and global and with tokenization and interoperability, then it becomes a larger marketplace.
Andrew, what are your experiences and the role that tokenization has, I guess, playing in democratization of capital and creating new opportunities for those cross-border investments?
Yeah, I'll just start with, we started doing tokenization about 10 years ago, and it was to solve a real-world problem around the 16-digit Visa card number is something that is very, very important to someone, right? And if someone gets that, it can be misused potentially. So we created tokens to be able to store a credential in a device. So think of your phone, Garmin watch, et cetera, or in the cloud. And we made significant investments to do that, and it's been incredible. In fact, we have 11.5 billion Visa tokens right now, whether they're in devices or in the cloud, which is more than the number of people on Earth, and it's more than double the number of physical cards we have. And that really created the ability to create more safe, secure payments in the digital world. What we're also seeing, actually what Juniper said, is they believe that by 2028, over 85% of e-commerce payments will be done through tokens. So we continue to invest and do that. We also see some other opportunities for tokens. One is around, really modernizing settlement infrastructure. So we're part of a project with 40 large financial institutions and 7 central banks to look at tokenizing deposits. So bank money, to be able to move money more seamlessly and frictionless. Then I'll jump on something that both these gentlemen talked about, which is around real-world assets. We see the ability to be able to tokenize real-world assets. There had been a moment where everyone was thinking about non-fungible tokens and digital assets, but I think the reality is the ability to tokenize real-world assets is probably more meaningful. You were talking about, fractional ownership. If you even just think about how it could really help people, a farmer tokenizing a commodity that is going to be produced, the ability to have someone buy some of that, that farmer then to be able to get lending off of that is really, really important. So we see and are looking at tools to be able to help with smart contracts and tokens, be able to really increase the ability for investment and also for sellers to be able to get access to capital.
Thank you. Adalberto, can technology-driven funding models effectively replace or complement traditional equity and debt financing structures? What are your thoughts?
Absolutely. So in our case, in Mexico, so a little bit of a context of what we do in Mexico and South and Latin America is that 60% of the people have no bank accounts in Mexico. 80% of people have no credit cards. There's just a lot of lack of access to capital and equity and banking, essentially, in what's happening in Mexico. And there's a series of reasons why this happens. And part of it is because it's an informal economy, meaning that people receive their money in cash and they kind of like stay in the cash ecosystem. And most of the transactions, like about for the transactions that are less than $50, the retail transactions, 90% are actually done in cash in Mexico. And what we do with, for example, Kueski Pay, which is it's a buy now, pay later payment system, is that we enable merchants to accept people's payments through Kueski Pay. And from one aspect, from the consumer standpoint, we enable people to buy now and pay later, and they don't need to have a bank account. We can just give them access to credit, even if they have no bank account. And the way we do it is we use a lot of data science and machine learning to make sure that we can understand the customer's profile of the consumer and give them access to credit. So from the consumer standpoint, there's a lot of funding from that perspective. Now, from the merchant perspective, which is the clients that we're using to accept payments, we have partnered with multiple lending companies that are using the data that is coming from their payments from Kueski Pay, so they know how much money they're actually collecting from their customers and how much are they selling, and are they selling more money, are they growing their sales, what type of products are being sold, etc. And they're using that information to lend money to these merchants, so that these merchants can start, as opposed to having to raise traditional credit from the traditional banking institution, which is actually really, we have less amount of penetration in Mexico, or having to raise capital, they can start raising money from their revenues. So it's a system called revenue-based financing, and there are different mechanisms in which you can do that. There could be unsecured revenue-based financing, or you can have secured revenue-based financing, in which for every dollar that you do as a transaction, they're going to lend that same amount of money to you as a merchant. So yeah, it's an exciting innovation that we're seeing, both from the consumer standpoint, in which you can fund the consumers so they can purchase the goods that they want to purchase, and also from the merchant standpoint with revenue-based financing.
Where does the technology come into play in this as well? Because with technology advancing so quickly, it's almost like you're chasing your tail to keep up with it. And I'm going to offer this down to Andrew afterwards, but for you first of all, Adalberto. I
mean, there's multiple aspects. The first one is, if you think about the way funding typically works traditionally, is that you have, let's say, like an application, a funding application, a credit application, that it's typically on a piece of paper. You need to standardize the type of questions you need to answer, and then there's a credit officer, an investment officer that analyzes that information and then gives you a response in, let's say, 1 week after you've done that at best, right? And with technology, you're starting to collect a lot of information, a lot of data from your customers. It could be consumers or it could be merchants, and you can build a questionnaire that is adapting to the profile of the consumer or the merchant, and it could be some sort of like progressive KYC, in which you can ask questions depending on the profile of every consumer, and you don't need to ask the same type of questions. And then when you do that, you can take a decision immediately. Like in our case, we can take a decision in less than a minute, and you can approve and fund a loan in less than a minute, which is incredible. So essentially, you use data science to score people and collect a lot of data. In our case, for example, we discovered that even if somebody doesn't have a credit history and doesn't have a bank account, based on the way people type, you can score people. For example, if somebody types extremely fast, they tend to be fraud. If they type slow, they're not fraud, but they have a lower credit capacity, so you can give them a smaller amount of money. And if you type fast but not extremely fast, they're phenomenal customers. So
you've got everybody thinking in this room, how quick do I type here? Andrew, did you have something else to add on to that?
I was just going to say guilty on the slow typer, so probably bad credit history, but no fraud. I'll add, Adalberto did a really good job of describing how important it is to digitize everything, to be able to get the data, to be able to make smart decisions. So we're going to see continued expansion into digitization. This is probably the only panel I've been on recently where AI hasn't come into the discussion, but we talked about machine learning, et cetera. I think AI and agents are going to be critical. They're going to help make the decisions you were just talking about smarter. They're going to do it on our behalf for us, whether you're a large corporate and you need to be able to decide when you're going to pay. AI is going to do that for us. For consumers, saving and investing. For us, we continue to invest across our network to harden our security, bring out more innovation, especially on the cybersecurity side, and make sure that we've got new tools to make sure our partners, M-PESA and all of our other partners, have the best access to be able to detect when a transaction is good and not good. So there's a lot of work going on there as well.
Sitoyo, when we talk about driving financial inclusion, how important is geography, connectivity, telecommunications playing into that?
I think when you look at financial inclusion, so the ability first, let me speak first from connectivity. It's really important that what the telecommunication companies, and we're lucky we're part of that ecosystem, that there is connectivity. And there was a panel in the main plenary where the Vodafone CEO was talking that Vodafone did the first video call via satellite to mobile via Vodafone satellites. And it's been commercialized this year. And the ability to have connectivity, the ability to have smartphones that in the developed world, smartphone penetration is 100%. In Africa, it's 25 to 30%. So, and the cost of a device is still unaffordable. It's still in the region of $50 to $60 into it. And we know the importance of a smartphone and what that means. So the infrastructure play, the ability to cover rural areas, the ability to see the excitement that's coming in with satellite technology. You can cover the whole of Masai Mara with satellite technology and not necessarily have the heavy cost of putting in infrastructure. So those things will make a big difference with regards to the technologies we use, the ability to drive financial inclusion. But also, it's important, not financial inclusion is important, but I think financial health is more important. This is the ability to help businesses and individuals be able to create wealth, to be able to cushion themselves when there's a shock or there's a health issue in the family. So the ability for us to create this fractional ownership, to create wealth management, to create insurance, digital insurance that farmers and so on can work in. But just wanted to touch base a little bit on the different funding models. So as we're building, so for example in Kenya we're doing two projects. One is universal healthcare, and you'll wonder what universal healthcare has to do with funding. And we're working with the UAE government to do the universal healthcare. But today we've digitized all hospitals. We've created a health information exchange, so you can see today how many Panadols are being consumed in the country. We're able to see how hospitals are being funded, are being compensated from the claims system, and the claims system pays after 45 days. which now you're seeing banks coming in and funding, $300,000-$400,000 differences for hospitals to be able to operate. And so those with advancement in technology, advancement in different sectors. And another example is agriculture. And we've put a platform for subsidized agriculture in Kenya. And last year, $288 million was paid by small farmers in the ecosystem. That provides a huge opportunity for traditional banks to actually come and provide credit facilities to farmers. For the first time, there is information. For the first time, they can see what they're producing. It's tea, coffee, sugarcane, and so on and so forth. So this, as we continue to digitize the economies in which you operate, then different models of funding, and as Andrew said, AI coming onto it will be something that will continue to accelerate.
Andrew, what do you think is going to be the most transformative thing to affect the industry to ensure a more financial future for all?
Ooh, that's a tricky one. I think it's going to be the same things we're seeing. I mean, I could talk about AI making smarter decisions, and it's going to get better. It's going to change a lot of things. But I think the most important thing to keep us going on the same course is actually security, cybersecurity, and making sure we protect every corner of the financial and digital ecosystem. And we spend a lot of time working on that.
Adalberto?
So I would say AI, and there's two types of AI. The first one is what we call the traditional AI, which is kind of like the machine learning, data science aspect of it. It's been a while for that time. But I think the more recent type of AI is really interesting, and the application of AI plus agents is really incredibly powerful, as mentioned before. And you can see how even you can start building AI plus agents that are getting you to purchase financial services or purchase goods that can make faster and better decisions than even what the humans are actually that we're doing on ourselves. So I think AI is definitely going to be super transformative for sure.
Sitoyo, last word from you.
No, I think for me it's ensuring that we leverage on the emerging technologies, but we remain focused to improving the lives of the communities in which we operate. So purpose will become absolutely key, and for us to solve real world problems.
Ladies and gentlemen, please put your hands together for the gentleman on our first panel in the Financing the Future track. Thank you all.
Thank you.